gold prices stabilized on Thursday, with rising U.S. Treasury yields offsetting the support from a weaker U.S. dollar. The market is awaiting the release of U.S. PCE inflation data to seek clues about the Federal Reserve's policy outlook ahead of the December decision-making meeting. Spot gold rose 0.13% on Thursday to close at $4,208.68 on Thursday. Despite the latest U.S. employment data indicating that the labor market remains resilient, signs of cooling have begun to emerge, and gold edged higher. Market expectations of a Federal Reserve interest rate cut supported gold prices. The market is awaiting the release of U.S. core PCE inflation data. The U.S. 10-year Treasury yield rose 4 basis points to 4.10%. U.S. real yields, which are negatively correlated with gold prices, also climbed 4 basis points to 1.864%, limiting gold's gains. Data released on Thursday showed that U.S. initial jobless claims fell to 191,000 last week, the lowest in more than 3 years and well below economists' expectations of 220,000. This data eased market concerns about the deterioration of the U.S. the labor market, but did not change expectations of a Federal Reserve rate cut next week. Investors are currently closely monitoring the U.S. September PCE price index report, which is scheduled to be released at 23 o'clock tonight. Economists expect the U.S. September PCE price index to rise to 0.8% year-on-year, up from the previous reading of 2.7%. The core PCE price index is projected to increase by 2.9% year-on-year, the same as in August. This data is crucial and is bound to trigger sharp volatility in financial markets. Analysts point out that the biggest short-term risk facing gold is the PCE data exceeding expectations. If inflation rises unexpectedly, it may boost the U.S. dollar and temporarily weigh on gold prices. Disclaimer: all the above content is for reference only and does not constitute any investment advice. Any trading decisions made based on this information are at your own risk of profit or loss. Please subscribe, like, and share. Thanks for watching.